Hello, Market Club members everywhere. Adam Hewison here, co-founder of Market Club, with your midday market update for Friday, the 13th of April. Has Apple's problems just started? We'll be looking at Apple stock today. And is Google making a mistake? We show you where we think Google is headed after their announcements, after they're going to split the company, and how they want to keep control of it. So let's take a look at the markets. But before we do that, let's take a look at our little personal one-on-one Market Club coaching ad here. Ask yourself, it's Friday, ask yourself if it's right for you. It's a free consultation, a free call. If you haven't called already, you should. 877-219-1482. I'll get you into the fray and see exactly what personal one-on-one Market Club coaching is all about. I think you'll be surprised. So let's get started on the markets. It's Friday, and of course the markets are under pressure today. Which is not unusual given the fact that we had a strong rally to the upside yesterday, 2 strong days, and we're sort of pulling back today and chopping around. Same with the gold market, as you can see right here. But let's go to our portfolio manager, and we'll start with the S&P, which is minus 70, which is the beginning of an emerging trend. And if we look at the chart, you'll see exactly what I'm saying. So here we are. You're looking at a daily chart, and you can see the fact that we're out of the Donchian trade channel. We're back into it now, about the midpoint, which we expected to come back. And I think we're going to chop around here for maybe a few more days, maybe early next week, and maybe we'll start getting some positive earnings numbers or something that's going to push it up. But generally speaking, the longer-term trend, and this is what we want to be focusing on, the longer-term trend based on our trade triangles, which are very powerful and very easy to use, is still positive right here. Right now we have an X on the weekly and an X on the daily. Now we don't use the daily so much, but it's more the weekly, and that's saying right now the momentum, at least for the short term, is on the downside. So you've got this conflict between the monthly here and the weekly. So it's just really not, so it's kind of like if you're an intermediate term trader, you should be on the sidelines. And if you're a longer term trader, you should still be long the market because the trend is still up based on a monthly trade triangle. So let's clear the screen. Just take a quick look at the other markets, and we're going to be looking at obviously the Dow very quickly. You can see the Dow is pretty much the same pattern. Had a big, strong day yesterday, a little pullback today. I would not be surprised to see this market regroup, but certainly the 1270 level is going to be a very important level. That's 12,700, of course. Very important level for this market. If it goes through there, then it's going to do a lot more damage to itself. But generally speaking, the monthly is still positive. That's the key one we're looking at. Looking at the NASDAQ is actually, the last 3 days is sort of flat. You can see it hasn't gone anywhere, but we did get a little signal yesterday on our daily, and that's not such an important thing, but the trend is still good based on our monthly trade triangle. So looking at our next market, we're going to look at silver. Silver is actually sort of mixed. A plus 55 means it's a trading range, and there's really not much going on there. Sort of midpoint on the Williams percent R, and certainly the MACD is sort of flattened out here to do nothing. But it looks to me like the market's building a base. And I think we are looking at if you just look at this market really quickly, and I'll show you what I'm looking at, and that is, if we're building a base, and this is the base in fact here, then this is the resistance level right here. So I would say around 33.50 is containing. If it goes over there, then we're going to take a shot at hitting these highs around 37. So let's see what happens. But generally speaking, it looks like the market's trying to base out at the moment. So going on into our portfolio to the next market, we're going to be looking at GOOG and Apple in just a minute, so just stay tuned for that. But if we go back to our next market, which is the gold spot, you can see gold actually had a nice move up here. You had see a little daily trade triangle came in at 1645. Now that's if you are a short-term trader, to be using the weekly and the daily. So minus 65 means a trading range. Again, it really needs to get over these highs that we've seen, and we mentioned this in our update. The 1680 level, which is right here. This is major 1680, a major resistance. We need to jump over that if we're going to get this market higher, and certainly the 1700 level, which is a big handle for this market to go, which is right here. It has to go over the 1700 level to start getting this. But I do think this level right here is a cyclic low period, and I'll scope this out a little further and show you what I mean by that. We said we'd go a little more in depth about that, as we did on the S&P 500. So let's just go back this market out a little bit and see a little longer term. And actually, let's just jump to a weekly because that'll give us the information we want. So let's go out a year, 2 years, and we'll obviously kill the various. So this is what we're looking at in this market. The big number, of course, is going to be the 1800 level. That's basically the trend line or the neckline in this particular case. So 1800 is the big level to get over. Now, obviously, we're $135 away from there. Is it going to go up there? But this is what we're looking at. This looks to me like a cyclic low, cyclic low, cyclic low. This all adds up to be a right shoulder, a head, and a right shoulder. This is actually left shoulder, I beg your pardon. So but basically you're seeing this sort of pattern develop, and if we get this move coming up, and I think next week is going to be a very important level in gold and the metals generally, but if we start seeing this market start to creep up just ever so slightly, I think then it's confirmed this will be a low, and then we'll challenge the 1800 level, and I think once through that we're up to 2100. That's the target zone that we're looking at. And if I may just go back to the S&P, because we talked about that earlier, and I really didn't give the justice at the time I wanted to give it, so let me just go back to that market for a second. Someone asked us on the blog why we thought that the May-June period would be the high around 1550 for this market. So if we scope this out just a little more, and we'll just do that really quickly. So if you look at the markets, if you look at the trade triangles where they kicked in, just put the monthlies on here, and I'll scope this just out a little bit. So you can see basically the monthly kicked in here on the 4th of April. Excuse me, the 5th of, I'm sorry, it came in at May 5th. So the market had a nice move up, had a sell, came back in September, nice move up, came back down. So I think we've just started to move like right here on January 10th. So as you can see, these moves tend to last for a number of weeks before turning around, a number of weeks here. So if you just measure this basically very quickly, if you measure from the original signal to where we had a signal here, it's quite some time, and also vice versa here to here. So I think we really just started. So I wouldn't be surprised if we see this market begin to consolidate and then go higher. So let's see how it plays out. But generally speaking, we're looking for this market to go to the 1550 level to 1600 level, and that's based on measurements taken here in the cycles we looked at. So I think you're looking at the cycles starting around the lows here, and I think we can progress that out to go into the May-June period. So let's see how that plays out, but I wanted to share that with you. It was one of the questions we had on our blog, and if you're not a member, you should be a member, and but you can post questions and share your ideas on the markets with other traders, and that's the key thing. It's all about the community of Market Club. So let's go back to the portfolio, and let's take a look at our next market. The next market we're going to look at is crude oil. Crude oil had a really good day yesterday, came under a little bit of pressure, and I'm going to get this. So you can see the type of, this is a weekly chart we're looking at. So the market closed last Friday at 103.31. We're currently trading at 103.07, so we're practically unchanged for the week, which is pretty interesting. And look at what we're seeing here. So I think, generally speaking, if we get this, I'll go into a daily chart. If we get this market just regrouping around current levels, I think we'll see this market do better in the future. So as you can see, if we go closer in 3 months, we had a very positive day yesterday, hit the PSAR, and today's like a small pullback, but I think if we can close, let's say, up at these levels and maybe even take out the opening here, which is 103.66, I think that would be very positive, but of course we're running out of time to do that. So it would look as though the market's trying to make that turn to move up and test the 108 level, at least in the interim. So let's go to our next market, and that's the USO, basically the same pattern there. And if we go to our next market, which is the dollar, now the US dollar, the euro dollar against the US dollar, the euro dollar took a big hit today. And if you remember, in our Market Club blog, we were saying that we thought the market would get back up to the 132 level. That's exactly what happened. That's where it hit the brick wall. And now sharp down day today on a Friday. And this is the line in the sand. This is the key line every professional currency trade I'll be watching next week. And you want to watch it too. And it's 130. If we go below 130 on the euro versus the dollar, like here, boom, like that, it's going to be very, very negative. We'll see the market go down to 125 in, I think, a very short order. And the risk, of course, would be going over 132. So it's a pretty well-defined risk-reward trade. So let's watch that very carefully. With the 130 is the line in the sand, and watch that carefully. So let's just clear the screen, go to our next market, and the next market we're going to be looking at is going to be the Reuters Jefferies CRB Index. Much the same there. It looks like the 300 level is going to be like a base for the time being. Not a good day, and of course that's partly because of what's happening in gold and also in the crude oil market and other commodity markets. So minus 85, emerging trend down, trade triangles negative. So not a market to fool around with right now. So let's go to a quick look at GOOG. GOOG came out with their earnings yesterday. They started under pressure, and this is not a good sign for GOOG. We're actually going to, let's look at the weekly, for example. This is what we like to look at. So this is going to be the third week in a row that GOOG has traded lower and closed lower for the week, and that's not necessarily a great sign. Plus 55 means it's a trading range. We do have our trade triangles in a positive mode. However, watch this market very, very carefully, because it can really change, and love can turn to hate in the stock market pretty quickly. So let's see how GOOG works out next week. But for the moment, our trade triangles are positive. And if I go to a daily chart, let's just do that again, and let's just look at a little bit more of a picture here, and we scope this out. You can see that for the most part, the market GOOG is having problems right around the 660 level, and I think that's going to be a key level. But also on the downside, this area here, which is right around the 565, 570 level, is definitely going to be key. So another $50, $60 lower, this market's got to hold if it's going to hold at all. So let's go back to the big star of the show, and that's Apple. Apple has been a juggernaut. Obviously, everyone knows that, but this is the first signs we've seen this market come under some sort of pressure. So let's just go to the 3-month chart. You'll see we've had 1, 2, 3, 4 days in a row the Apple has closed lower. This is I don't know when the last time that happened, but it hasn't happened for a long, long, long time. You've also gone below the PSAR, which is another sign of weakness. The next major support coming into this market has got to be around the 580 level, which is right around the lower end of the Donchian trade channel. Now, looking back here, we are oversold, and that's one thing to remember. And we've just seen our MACD turned down, so that's another negative for Apple. You see, but generally speaking, Apple has been the juggernaut. It's been the thing that's held everything up. But not to say we're bearish, because our trade triangles are still very positive. But if you look at this on a weekly basis, it is a negative week, and certainly this low here, starting around 600, a very big psychological number for Apple. If it goes through there, that'll be a new weekly low. And if we look at the monthly charts, I mean, the charts are just amazing on this, and we scope this out some more. You can see this market's had one huge move up just in the last several months. The last 3 or 4 months, you've just gone from 400 to 600, which is an enormous amount of money changed hands. But when you hear analysts talking about $1,000 a share for Apple and all this other hype, I want to classify it as hype, I would say then you may be having some problems. We've come down, the high was 644. We're currently trading at 609. So I think next week is going to be a very important week for Apple. So anyway, this concludes today's update. I appreciate you stopping by, and wish you every success in your trading today. And don't forget, give us a call at 877-219-1482 and see if that personal one-on-one Market Club coaching is right for you. I'm Adam Hewison for Market Club. I'll see you on the web, and I'll see you on our blog. Have a great day.